In this video, we are going to talk about the stock market, which has come down here a little bit. We have been already forecasting this correction and we expected a 10% correction from the top, which we haven't done yet. We are not done yet. We can expect another downswing to the 41 level here in the S&P 500. And why is that? The 3 months T-bill, Treasury bill, the risk-free yield you get directly in the United States. It yields more than stocks. It is strongly above the S&P 500 dividend yield, and now it is even strongly above the earnings yield of the S&P 500. As an investor, you obviously think, where do I put my money? And you have the choice to give it to the state, to the US, or you can give it into the economy, to corporations, and to businesses with buying stocks. Now, there's high pressure on stocks and for businesses to become more profitable. As the government, the risk-free yield in bonds pays you more yield than stocks. Businesses need to be more efficient. Businesses need to make more profits. They need to work harder to attract investors' money, because otherwise the investors would just park their money at the state for the given interest rate and they'll be happy about it because the stock's yielding less. If businesses cannot improve and they cannot lower the costs and also ramp up their profits massively, the investor think, what should I do with stocks? Why should I go into stocks and risk my money if I get a safe yield directly in the United States? But you may ask yourself, there is always this equity premium, right? That stocks have to perform better in the long run. And that is obviously true, as a company is a living piece full of ideas and productivity and efficiency, and it goes with the time, right? And the bonds, they're obviously fixed. If the inflation gets up, you don't profit. If the inflation gets up again, you profit with stocks. Long-term stocks are definitely having a much higher chance to perform well. So what I specifically see here as the biggest conflict in this scenario is that we have the conflict of the fiscal policy and the monetary policy. The fiscal policy means that the state has the choice. So the state can say, print money, we need money. And the central banks will say, yes, we're going to give you whatever you want, like we had in COVID, clearly fiscal policy. Monetary policy, and here comes the conflict into those two. Monetary policy wants to keep their inflation target at all costs. They don't care about what the states say. If the states say we need more money, they say nope, we ain't going to print any money. There's no chance. We will have high interest rates as long as the inflation is up. And this is the huge conflict, because we live in a world where the states, they spend so much money. And the states, they want to solve every single problem with printing more money. We have the Green Deal, we have the Inflation Reduction Act in the USA. Whenever a problem is in society, people ask the state, how can you help me? How can you help me? Give me more money. People don't want to work anymore. We have the great stagnation, where work-life balance and 20-hour weeks and all of that stuff promoted being unproductive, drug problem in the United States. And the government has no other ideas solving these problems than printing money. And of course, we got the demography, people getting older. And all of these factors combined, they need a change that is different to money printing, because those factors, deglobalization, demography, Inflation Reduction Act, Green Deal, they all cost a lot of money and they are not productive. So it definitely need a stop in the money printing. In this picture right here, the Fed chairman got a question. You are prepared to do whatever it takes without any reservation to protect price stability. Chairman Powell said yes. And he also stated higher for longer. higher interest rates for longer time. As we are cryptocurrency enthusiasts and we would like to know what it takes for the next bull run, there is one question you need to ask yourself. When do people want to speculate again? What does it take for people to speculate, to go all in with their money on cryptocurrency, to risk a lot and to put their money into high risk investment? Like cryptocurrency is considered in the mainstream. Obviously, if you know what you're doing, it is not high risk at all. But what it takes is definitely a reduction in the inflation. It takes a low unemployment rate, and it also takes a high savings rate. If we take a look at these factors, we can see right now that two of them have failed. The savings rate is historically low. Americans, they have hidden over $1 trillion in credit card debt. Savings rate is absolutely low. And of course, the inflation is still too high. Now we have the third factor, the unemployment rate is relatively low still. That is a pro. And we have seen the Ethereum futures ETF approved 50-50, 50% Ethereum, 50% Bitcoin. Institutions can now finally have exposure in Ethereum, and the 100% only Ethereum without Bitcoin ETF is also very likely to be approved next week. We can see that the Ethereum price has profited a little bit here. Now, investors think where to put my money to let it work the hardest for me. You want your money to return the greatest results. My favorite coin is, of course, Pzen. Pzen is a yielding protocol, a asset. Here is an example for you. If you decide yourself, you did your own research, and you buy 1 million coins today at $900 with a 10x in price and volume, your investment would have grown to $9,000 and yielding $140 every single month. This is the chart here of Pzen, and it really boggles my mind how this protocol can perform in the future. We've seen here already a nice run up. Now we have seen a little correction. Let's see. It is also dependent on what Pulse Chain does, as our main liquidity pair is bonded in Pulse Chain. And if we take a look at what Pulse Chain is looking right now, we can actually see that Pulse Chain is looking very strong in my opinion. This is here a rounded bottom, and it is very constructive. If you look at this more closely, we can actually see that we have seen here this double bottom, and since then we have been putting in steady higher highs, and this rounded bottom, in my opinion, this is a highly bullish pattern, and as soon as this thing picks up steam, it can go very fast and end up in a very nice parabola where we could easily ramp up here back to the sacrifice levels in no time and even hit straight above that. A very likely scenario, in my opinion, where we hit just go back to 2, but because this double bottom, it looks very bullish, very constructive. Higher highs, nice accumulation here. Time, a lot of time, takes time, very healthy, very constructive, no pump and dump, positions being built, people get washed out, everything you want for a bottom building. And if we see this scenario play out for Pulse Chain, Pulse will have an even greater run, because our main liquidity pair is bonded with PLS, and as our ratio stays the same, we are currently here at 21 rep PLS per Pulse. And if this ratio just stays the same and the Pulse Chain price goes up, we can exchange 1 Pzen for 21 PLS, but the 21 PLS are obviously worth a lot more in US dollar terms, but the ratio 1 to 21 stays the same, so our US dollar value also goes up massively. And that is only the layer 1 going up, and as you all know with those layer 1s, Pulse Chain is not going to be the 1000x, but projects launching on Pulse Chain will be 1000 to 10,000x. If you liked this video, I wish you a very nice start in the new week, and I wish you a lot of success, and consider the opportunity that is Pulse Zen a mind-boggling protocol. It can definitely change lives. It has already. And if you haven't done so already, go over to my Twitter account, follow me over there for daily updates. Also, subscribe to my YouTube channel as you do not want to miss any further video. And with that said, easy way out.